Hey, welcome back to another video. So, of course, in the last week we've had tech earnings. Wasn't the best. I wasn't really expecting too much, and to be honest, portfolio is not really hurting that much, to be honest. Now, in the last month, obviously, we have started to see a pretty much of a steady decline, a healthy sell-off, as you would call it. But if you do know, when I did start this challenge, what you're looking at is simply not me actually being down 51%, but that's because I transferred a lot of money into another account. And so when I did restart this account at around 1,000, 1,100, my optimal goal back in, I think, August was to push this back up to $100,000. So we are back up to that challenge and we are on it. So as of right now, we're sitting just below 5,500. It's a healthy amount. Haven't really seen much growth since August. Now we're going into the holiday season, so I do expect that tech should be pulling back a little bit. Aside from interest rates, credit card loans and all this other stuff that's hurting consumers right now in this country, I do think that we will see a slight recovery at the end of the year. But nonetheless, what's most important is the fact that in order to retain more value in my portfolio, I've decided to go a little bit more defensive. And this isn't really so much me being fearful of the market, taking more of a sell-off. It's more of, hey, I'm looking out in the best interest for myself, and I'm looking at what might be performing when techs will not be performing, as we've seen last week. So as of right now, my largest holdings, from top to bottom, as you can see here, are SPY, and then from top to bottom, of course, SPY, NVIDIA, Amazon, Tesla, Apple, Merck, Berkshire, Shopify, DigitalOcean, SoundHound, and then Home Depot. My generous $1 of Home Depot, which I am now 7% loss in. For the most part, you can't really go wrong with SPY, and you've probably heard a million people preach this, a million different ways, that SPY is most likely going to be there for the longest amount of time because it is a conglomerate of 500 companies, and if the top 500 companies go out of business, then we're pretty much out of luck, right? Now, for a company like this that pays an extremely low dividend, I'm not concerned with dividends. I'm more concerned with the growth factor, the fundamentals, that type of thing. And when you look at how the companies are performing, year to date, okay, SPY has taken a pretty significant sell-off. At one point, it was almost 460, as you can see here, and now it's around 410. Will it break the 400 mark and fall below into the threes? I don't know. But an analyst did predict, or did, hypothesize that there could be another 5% sell-off in the SPY by the end of the year. So basically, a 10% drop in SPY would be about $41. At 5%, that would be about, what? I'll let you do the math. But for the most part, that would pretty much drag below that $400 mark. Now, I'm not going to try to analyze this, but I think it is pretty generous that SPY does pay dividend. It's not too much, but for the most part, it is an ETF that grows, has good fundamentals, and it has fantastic holdings. So for the most part, right now, since my portfolio sits at, $1,000 with SPY alone, given that I had 1,100-ish at the beginning when I transferred my account over to my other account, all that equity, it's not only humbling, but now my goal is to work my way up brick by brick. And, you're going to hear this 1,000 different ways. But for the most part, now that we're starting to see a slight decline in the market, what am I going to be investing in? I'm going to be investing in more of a defensive holding, for example, and I've compiled 4 different stocks that I feel like you could hold a lot of value to, just out of my personal opinion. And one of them will obviously be SPY. Right now it makes up about just shy of 19% of my portfolio. Look at that. That's a pretty heavy allocation to SPY. Prior, it was NVIDIA, Apple, and then Amazon, all that good stuff. And now that, the tech market is starting to sell off a little bit, I don't have the generous, outlook of looking at a portfolio growing, 24% in the span of year to date or whatever it was. And, in other portfolios of mine, I've seen it grow a lot more, and it has taken a little bit of a sell-off, but we're still well into the green because this year has been very generous to me on that aspect of the tech market. And trying to build up now, it's like, would I rather keep investing into techs very heavily right now when all they have been doing has been selling off, especially right now during earnings season, and then right now we're going into the holidays. Next year we have election season, and then right now we have tensions, global tensions with other countries and whatnot. So I figured, okay, go a little bit more defensive, play it out until the end of the year, see what happens. And I don't think I can really go wrong with that sort of thing. So about 20% of my allocation is what I plan to have into SPY, and I don't think you can honestly go wrong with that. Pays a little dividend, not really worried too much about that. It's not really going to leverage my portfolio. It's more about the growth and holding its equity. On another note, too, my other second holding that I want to have more invested into will be Merck. Now, Merck has taken a little bit of a beating from its all-time high, but I do think Merck has fabulous potential. Aside from other pharmaceutical stocks that I've seen have grown, substantially in the last year or so, and others that have lost a lot of value. For example, Eli Lilly is one that has done extremely well. I don't own any of it, but of course I've been watching it as it went up, a huge percentage. Now, year to date, Merck is down 7%. Of course, not favorable. But if you do remember last year when the Nasdaq sold off 25 to 20%, somewhere around there, Merck was up tremendously. It was up about $30 a share from its, all-time high. And of course, now it's starting to sell off, but as a Dow stock, as a pharmaceutical stock, and as a stock that pays a hefty dividend, if I'm not mistaken, a 2.73% dividend, I don't think I can honestly go wrong with this, especially knowing the fact that if the Nasdaq continues to sell off, I can maybe rely on this stock a little bit more to hold its equity, or maybe it will perform better. And I have seen them make a few acquisitions within the last year or so. One being Prometheus Biosciences, or Bio whatever. It's a Prometheus Bio stock. That stock had a tremendous run up, especially with earnings, and then they got acquired. But I don't see Merck going anywhere. And at 102 a share, I don't think you can really beat the price on that, especially since it pays a dividend. The third one being Berkshire Hathaway, Class B, of course. If I owned a Class A shares, I'd probably wouldn't share that. But for the most part, Class B shares, we have seen this. It's still up 7% year to date. It has taken a little bit of a sell-off, about a $40 sell-off, but it's still up year to date. And I have spoken to a few other friends of mine who do own, Berkshire and other real estate stocks, and a lot of them just don't like the idea that it doesn't offer a dividend. I said, listen, a dividend should be the byproduct of, the success and, the performance of a company. If they choose to offer a dividend, do you think people who never invest into Tesla, Amazon, Facebook, because they didn't offer a dividend, they're probably beating themselves up right now because they said I could have made so much money because of how much growth, keyword growth. And so when these stocks sell off, they usually have a hefty sell-off, but a lot of these stocks that might have a higher paying dividend is kind of used to entice the investor to either hold on to the stock saying, hey, we're going to have, this high percentage dividend payout. Like basically the dividend payout ratio is not always 100%. Sometimes companies they choose not to pay out a dividend on a monthly basis or a quarterly basis. Sometimes they choose not to. When they do, it is nice. It's a nice reinvestment back into the portfolio if you choose to drip it back, so it gets reinvested back into shares. But for the most part, I don't think I can really go wrong with Berkshire. It's been around since like the beginning of time, and it's held its weight fairly well, especially at the end of last year when the market wasn't doing too well. So that's the third one. And then the last one, which I actually haven't added yet, this one is going to be SCHG. Now, I don't want to throw you off here, but a lot of people recommend SCHD, D as in David. I'm just not really a fan. I've had it, earlier this year. I think I had like 200 or 300 shares at one point, somewhere in between there. And although it pays almost a 4% dividend, to me, I just haven't seen the amount of growth that I was looking for. So when I did liquidate, that ETF and I invested it back into other tech stocks, I saw a pretty substantial, run up with those other tech stocks, which made me even more money. And they've held their weight, significantly, as opposed to that Schwab high dividend paying ETF, which I might catch a lot of slack for, but that's okay because, we are all entitled to our own opinion and stock choices. On this note, though, SCHG, G as in Greg, I've been researching this stock for quite some time, and year to date, it's been performing extremely well, up 25% year to date. And I've looked at a couple of their holdings, and I don't really think I can go wrong with it. It's a large cap growth ETF. Now, when it does have its sell-offs, it is going to sell off, but for the most part, it's diversified. I think it pays 0.4% something dividend. So it pays a little dividend, but for the most part, you're investing it because of the growth factor. And on that other note, I mean, can't really go wrong with it. So those are the four holdings that I plan on investing in a little bit more heavily until the end of the year. Now, if the market starts to change and turn around, of course I'm going to adjust my investments. And I did post on Twitter not too long ago, which I will pull up here, and something about automatic investments. So basically, this is what I find extremely important, and this is just personal opinion here. If you have a brokerage platform, investment platform that allows you to turn on automatic investments and you can afford it on a weekly basis, bi-monthly basis, monthly basis, whatever, I highly recommend it. Keyword recommend. I'm not telling you what to do here, but I've done this. I've done this since I believe end of last year, and it has proven to be extremely beneficial to me. Very easy, because I have over, well, looking here, I have 10 active stock investments, every 2 weeks, and I don't want to have to deposit money and to make, a purchase on 10 different stocks every 2 weeks. I honestly think that's too much work. Now, if you were to ask our parents 20, 30 years ago, what did it take to purchase a stock? It's a whole bigger ordeal, because you had to be like basically a little bit more of an accredited investor. You had to get set up, you had to wait for the check to clear, and you had to buy at market close, this and that. So it's like, okay, very confusing. Nowadays, I could literally just swipe up and purchase a stock, and I could purchase a partial stock. I could purchase a penny of a stock, if I'm not mistaken, $1 of a stock. So whatever, floats your boat. But for the most part, this is one thing that I like to look at once in a while, how much I've invested at the end of, from last year up until current day, and it's been about a year or so. But looking at this, obviously I've invested a lot more than this 18,300, because this is just the automatic investments. This isn't money I decided to just transfer over from my account and then just purchase, like that day. This is just on a recurring basis. That's automatic investments. Um, I don't really think this number matters too much, in a sense too, if you're not seeing like a significant growth in your portfolio percentage wise, because you could invest 20 grand and you could lose 25 grand. So what's the point, right? But for the most part, the amount that I've invested this year, I'll be able to probably clear about 100, maybe I want to say 100,000 invest into the market. And I don't say that to brag. I say that because it's important that I don't strip myself completely financially, but it's important that the stocks and ETFs I'm investing in are going to be taking care of me if need be. For example, whether it's dividends, which if you check out my last video, I don't make too much in dividends. However, though, brick by brick, it takes a lot to have invested into the market in order to have a lot paid out dividends. I know people who have make 10,000 a month in dividends. I know people who make 50,000, sorry, 10,000 a year and then 50,000 a year in dividends, but they have over 7 figures invested in the market. We're getting there. So for the most part, right now, with where I'm sitting at with my portfolio, I do think that I can hit 20,000 invested in my portfolio by the end of the year. And I like these optimistic goals because they're realistic, but they're not overly optimistic. That's one thing that a lot of people maybe should work on, including myself sometimes, is the difference between realistic and optimistic. Um, and I will say though, it has been a little bit humbling with the market sell off. How it has been in the last couple months, and knowing that at one point, I started my portfolio around 30,000, and I said, how long can it take me to break 100,000? And it took me a span of basically from December 22 to middle of July, something like that. So pretty much less than a year. And now I'm trying to build my portfolio up from here, from like 1,000 ish up to 20,000 by the end of the year. So a pretty significant amount has been invested in the market. But of course, this is what it takes, for myself in order to be successful in my own mind. Everyone's going to have their own different, ideas, their own different path, and their own different financial standings of how much they'll be able to afford to put in. So it's different for everybody. And I do know people who put in a lot more than I do when it comes to investments, but they're in that financial position to do that. So other than that, for stocks, I'm going to be investing heavily: SCHD, SPY, Merck, and Berkshire Hathaway Class B. And we shall see how the market will be performing, and I will give you guys a little portfolio update, soon. Probably be hopping back into the cryptos as well. I do have a very small percentage invested in cryptos. I think it's maybe like 18%, something like that, or 8%, one of the two. But other than that, hope you guys enjoyed the video, and of course, happy investing, and I will talk to you guys next time. Take care.